All right, the trading day is over. It's Thursday, October 18th. Another day of red for all of the major indices. As you can see there before you, the Dow was down 1.27, the S&P was down 1.44, the Nasdaq down 2.06. Gold more or less flat, down 0.12% or $1.50. And oil, despite a pretty volatile day, this is actually starting the after hours market here. Oil was actually down quite significantly today. It doesn't show there. So S&P, well, all the indexes, all the major indexes down, and including, where am I here? Well, actually not the Treasury market, but I was looking at these few different indexes, the S&P, the 10-year Treasury, the U.S. 10-year, and light sweet crude oil futures, and just making a note to myself that basically since October 1st or 2nd, all three of these markets have been declining quite significantly. Look at the S&P, took a few days, but it reached a high on the 1st. Well, I guess on the 3rd. It was level between the 1st and the 3rd, and basically it's been declining ever since then. I just showed you that in crude oil futures, and this is the 10-year Treasury yield, which moves inverse to price. So the value of Treasuries has been declining quite precipitously since the 2nd of October. So just an observation that all these markets are going down, which is not necessarily what you would expect, unless, of course, you understand that the movement in these markets is largely determined by the amount of money available. So as liquidity reduces, as the amount of money sloshing around in the system declines, it's not that surprising that all of these indexes might go down together, or the value of these assets might go down together. A notable exception to this is gold. This is the 6-month chart for gold. Hopefully you can see it there. Now you can see since basically the middle of August, gold's been leveled out for quite a stretch there, teasing with the level of 1200. I talked about this a couple days ago, how in the last few days, let's see if we can get a better chart here, really since the 10th of October, gold broke comfortably through 1200 and is now trading up, at 1220, 1225. And despite the significant gyrations in the markets these last couple trading weeks, gold has held that new high. So it hasn't been selling off when the market's been selling off, nor has it been selling off when the stock markets are going up. So that suggests a couple things to me. First of all, when we're having updates on the markets, if we're not seeing gold go down and we're not seeing the yield go up much, that suggests to me that's the same old bulls just buying more stock. I mean, it just suggests to me that they're not finding new buyers. It suggests also that perhaps part of the market is pivoting to recession-proof their portfolios. Maybe gold is that kind of pickup. If there's going to be more interest in gold, there's going to be more interest in cash. And I had actually the Dow Jones utility, but I guess I closed that. Let's see if I can pull that up here. Was it the Dow Jones utility average? No, I don't want the Wikipedia. And so utility components of the Dow Jones Industrial, and it's having trouble loading for some reason. Well, you can see that from the quick preview here today, despite the Dow being down, 1.27%, the utilities component was actually up 0.18%. So fairly, it um, it survived the down day. So that suggests to me perhaps more investors are pivoting into recession type stocks. So you would want to see, you'd expect to see utilities, consumer staples, and tobacco doing well as gold. So I think we are starting to see that, and that's a bit of my theory of what's going to be happening here. Long term or medium term, as I said in recent days, I think the stock indexes are facing a major headwind in the form of shrinking liquidity, shrinking quantitative tightening, the selling off of bonds by the central bank, which are going to, it's not just the Federal Reserve. These are massive amounts of money being sold, being destroyed essentially, taken out of existence by the Federal Reserve directly, and increasing interest rates are going to spur and are spurring already deleveraging, which is another way where money effectively ceases to exist, or where the money supply is shrinking. So it's really hard for me to imagine how this index or any equity index is going to survive at its current values when facing a shrinking money supply. It's hard for me to imagine how that succeeds. Whereas something like gold might succeed because people want to know that the value of their money is maybe going to be sustained through a recession or through a downturn. So that's where gold can have a bit of interest, as times get tougher. And same with utilities, because people aren't as afraid that utilities are going to sink, so they turn to those, or to well, that's useful. They turn to consumer staples and tobacco. And I think Philip Morris had a great day today, up 3.5%. So I mean, I know they released some great results, so that wasn't, maybe that's just a coincidence, but you can, I don't know if you can actually see that on your screen, but Philip Morris up 3.5% and continuing there. So I'm curious to see if this is sort of the start of a pivot into more recession-proof stocks. I know that seems probably crazy to people who listen to the Federal Reserve and others talking about how explosive and incredible our economy is, but obviously I don't see that being sustainable for too long, with housing declining very rapidly, with autos declining very rapidly, as Peter Schiff has been pointing out. As the money supply is shrinking, these indexes really only have one way to go. And so I do want to give a quick shout out to another YouTube channel that I watch regularly. I watch quite often and really appreciate, and I think if you're watching any of these, you should check it out. It's the Money GPS, and that guy does a video at least every day on the markets and the way money moves and the way central banks are behaving and real estate. And the guy hits it out of the park pretty much with every video. So I really enjoy those. I've got that on my channel as, I think, a favorite channel or a preferred channel or whatever it's called. You can check it out there. Highly recommend it. Very informative guy and always giving lots and lots of information. So I really enjoy his work. In the short term, as I said, I think yesterday, I see more pessimism right now. I don't see this bouncing back up to 2,900. I'll say that in the next couple weeks at least. Thanks so much for listening. Have a great day.